let's keep going. What we're looking at over here is the monthly chart. I just took off comments for a second so I could focus in on this goodness. This is stuff that gets me excited. And you're looking at the monthly chart over the past 100 years. And then you're looking at the Dow weekly over the last 20 years. And it's quite interesting that you're seeing this fractal play out, right? What is this? Is this human behavior in the markets? That's what it seems to me. There's a great comment down over here, by the way. Fractals are the future of algo trading. My guess is that Renaissance Medallion Fund made most of its money on strategies based off the fractals. There are a lot of people out there who take issue with people following fractals. Yet that's what technical analysis is. It is finding patterns that repeat time and time again from investor behavior within the markets and then being able to manage your risk off of it. What's interesting about this to me is this. All right. Now, I want you all to give me the freedom here, the liberty of just to be playing in the sandbox. Whether you agree, expand your horizon and try to see what I'm talking about. And then let's see how that helps us going forward. And what we're looking at simply is the price of Bitcoin overlaid with the price of Amazon. And what's really interesting about it, and just let me explain first. I mean, it's hard to not notice the similarities. There are definitely differences, but the similarities in just on both of them going up, the down, at the same time, like this, here we go, the same thing, right? There's a difference over there on Amazon making a double wave over there, while Bitcoin made one. There's slight differences. But there's a lot more similarities. And what is interesting is this might actually be more about adoption of technology. This is kind of like the flow this is a big difference that occurs right here. But what happened over here on Bitcoin? This was the dollar liquidity crisis. And you see how instead of coming off just a little bit, we had that anomaly perhaps happen, right? Again, the similarities. And this is different also. You're seeing Bitcoin making Amazon making a double wave over there. Bitcoin is a little less pronounced. It's different, and it's always will be different. It's just the question of if you see the drawdown on Amazon was greater here as well. This was for Amazon, the dollar liquidity crisis. And, whether you think that you're just finding stuff out there or is this what's happening? Let's take a look at this one next, right? And before I go forward, I want to go backwards, right? This part over here, Bitcoin out of the gate making those huge gains, Amazon out of the gate making those huge gains, right? Is it possible if you break this up into 4-year periods that you are seeing up until this point here, this is real time, you are seeing what people would think is diminishing returns? If you were just going off of the two previous data points, you would be thinking that Amazon is for sure putting in diminishing returns. There's no question about it. Right? Now, what's really interesting is going forward, here's what happens. And is it possible, by the way, that what you see is and this is 11, 12 years for Amazon since its inception. This is the same thing with Bitcoin. You know that we are early adopters right now, and we're getting close to that chasm of reaching Main Street adoption. Is it perhaps that more what we're seeing here is the rate of adoption taking place? And once Bitcoin makes that jump, is it possible that the structure we've seen in the past changes? The 4-year cycle dies, right? Look what happens to Amazon from here on in, right? And I know I have these 30% drawdowns. Hold on one second, right? So you're looking at from where we are today, is this a random walk towards 1 million that Willy Woo talks about, the last cycle? And at the same time, talking about those mini bulls and bear markets, we have multiple 30% drawdowns along the way. They are different in that this is Amazon, right? We're talking about Bitcoin, but how different are they? I mean, I want to be flexible here. And by the way, this was a 30%. This is like a nice long bear market, 30%, little bit of correction, 30%. Is this possibly the future of what something is going to unfold on Bitcoin? And if it is, do you at least want to be aware? Now, listen, if you don't want to follow fractals, I'm not talking about that. What we see next is Bitcoin make like a peak towards that end of the year, early February, or early January, perhaps into February. And it might. And there's probably a strong probability it does. But if that happens, by the way, I'm not going to be like, well, the next thing that happened on Amazon was that it pulled back a little bit and then made a higher high. Could that be that March high that a lot of people are expecting before pull? I'm not going to like start following the fractal in itself. But what I'm trying to put or plant into your brain, could things be changing? Do you want to sell your Bitcoin going forward? And for me, for that to happen, price, first of all, I wouldn't, if I think this should have been tomorrow's session a little bit, but I'm going to start talking about it today to develop my thoughts. If Bitcoin peaks out at $160,000, diminishing returns, $140,000, $160,000, and that happens over the next like near term, do you want to sell your Bitcoin? Do you think if that happens, by the way, that we're going to see an 85% drawdown off of that level? Or do you think actually that because of the changing dynamics of the market, maybe we wouldn't? Now, I personally think that if we were to see, prior to what we saw over the last couple of weeks and Bitcoin not putting diminishing returns, shoot up towards the top of this range, that for me was likely that we would be looking at, a potential 85% drawdown in Bitcoin. And not for a second do I even write that off in going forward or in the future, right? It's a volatile asset. You've all seen where, just the other day, Bitcoin coming off 30% off its all-time high in a bull market relatively quickly. I could imagine when there's pressure out there, and there was a little bit of pressure coming from the traditional markets and the macro, there's no question out there. But if there's big pressure out there, Bitcoin is far from immune. It's actually very sensitive. I'm not writing off 85% drawdowns or anything like that. I think you should always be prepared for that. What I'm saying to you is outside of Bitcoin moving sharply into an overvalued, what I consider to be overvalued area, that I don't think that I would be looking to sell my Bitcoin at $160,000, $140,000. All right. I want you all to know that as I continue to adapt to the market and what I'm looking forward. I don't think, by the way, that what we're looking at going forward, a lot of people don't even want to have this conversation. And I think this is it. And I tried to have it, right? I mean, diminishing returns, if Amazon's not experiencing diminishing returns, right? Why do you think Bitcoin will? That's where my mind is right now. And I want to make a cleaner, it might not happen. I hope it happens tomorrow, a presentation of what I'm expecting or looking for going forward. Listen, I hope you're okay with me adapting to what's happening in real time and no one as long as I let you know ahead of time, but I wouldn't feel to sell my Bitcoin at $140,000, $160,000, right? Now that doesn't mean if I thought we're seeing the top of a market that I would not be apt to sell altcoins versus the US dollar. I definitely would, but I do think, or I could see the potential changing structure of the 4-year cycle here. And I'm not just going to stick to it and be like, and I'm not yet saying that it's broken. It could very well play out. We talked about that strongly yesterday. And if it does play out on time, I want to be there to adapt to it and be fluid. But at the same time, if the market's moving on, I want to make sure I'm moving on at the earliest opportunity. We've always said the earliest opportunity that we could say the model's broken was first at the beginning of wave 2. And then it's at the bottom of the beginning of wave 2 out of the correction of wave 1. That's why wave 2 was so important. Then it became what happens in the correction of wave 2. The correction of wave 2 is not over. There's no question about that. Bitcoin could still recover out over here. And we could see, as we talked about yesterday, a sharp move up. And if we make a sharp move up, even if it takes until the end of the year, I expect fireworks into January and February. I am just not convinced that those fireworks are going to end in Bitcoin becoming overvalued as the way I value Bitcoin and or setting up a different structure going forward. And the one risk or the one thing that I am aware of is that 2022 seems to be a lot different in the fact that central banks are moving towards tightening. I'm here to challenge myself, intellectually to continue to like push against all boundaries. Obviously, you clearly all know that like I'm not just trying to stick to a thesis. I'm trying to make sure I get it right. All right, so there's a lot I want to talk about though, and I'm going to get into that. Bitcoin could go global faster than Amazon. We're looking at different fractals of time. By the way, Bitcoin trades 24 hours a day, 7 days a week. Amazon is limited to the public market hours. It doesn't trade over the weekends. So I'm not trying time wise, because by the way, if you just zoom out over here, what is true and what's the difference in the same is that it's roughly since the time this started trading on the public markets up until where we are today on the fractal, it's about the same amount of time. On Amazon, that's like 11 years, on Bitcoin 12 years. So rather than trying to match them up on time wise, what I'm talking about is after a certain level of adoption takes place, does all of a sudden you see something occur like this? So I think it has a lot more to do actually with adoption. Look, it's just a theory, throwing out theories, but could Bitcoin, is this jumping the chasm where the structure of Bitcoin market changes, and will it resemble something like this? And I'm not saying that over the next like 12 years, this is what Bitcoin will do, right? I'm not trying to, I think that as what was said here by Andy, that the adoption taking place on Bitcoin, obviously taking place faster than the internet. I'm not sure if it's faster than mobile phones, but it's crazy. So a couple of other things I want to talk about, and that was Amazon on log scale, yes. Okay, that's the easy question. The next two questions are very hard, so before I get into the hard ones, let me take one more easy one. I don't believe in random walk. It's still a market and human involved. Well, I'm not sure, Thomas, exactly what you're mean there, but do you mean that there's nothing random about it because it is human behavior? For sure. I wonder if the random walk simply means it's bad terminology and simply means that like there's ups and downs, why we make that like 45-degree angle up. I wonder if random is not random in that, like, yes, Thomas, it is humans involved, and it's also algos seemingly printing off of human behavior, probably because it catches a lot of traders on the wrong side and is able to produce a lot of liquidity for them to continue playing off of, right? So our algos trading off of past human behavior, right? Because that past human behavior is still current today. And so random might more mean like, ups and downs instead of, it's not random as Thomas is saying, but it is ups and downs with that 45-degree. I think that's in the spirit of what Willy Woo is presenting and or saying, right? So the two hard ones, though, let's talk about them over here. And would I take some gains at all on Bitcoin? So like there's two questions that are very hard. Let me point them up first on the board before I talk about them. The other question is, you talked about potentially leveraging some kind of derivatives to hedge at the stop instead of selling. Could you elaborate on which platform and which type of derivatives you'd be looking at? Like the first part of the question I'll answer. The second part of the question, like, I do not get into execution, and there's a whole bunch of information on the Exiting Bitcoin channel. I also pinned to the Exiting Bitcoin channel. Cole gave some suggestions of brokers available to those in the US. But let me talk about them. As far as would I take some gains at all, like, first of all, that's flexible and fluid. And if I am, you will know what I am doing, right? That's number one. And so I'm probably more apt only to take gains, well, for sure, on leveraged Bitcoin positions. I got neutral on the leverage, but once we break out, and I do believe we're going to break out to the upside, I will be participating. And on any type of like move that would like be like, all right, here looks like, a near-term top, I will be exiting those positions. As far as spot Bitcoin, where earlier on in the cycle, I had every intention of exiting also spot Bitcoin. At this point, I really do not think that I will or would. Obviously, things can change. It's more along the lines of why I've always said also at the bottom over here is when it's a good time to, if you're interested and experts only. I really don't think anyone should do anything like any type of leverage trading unless they understand how to manage their risks, that they believe that they're an expert. But and I told you when I was doing it back at 11, 12, and 13,000 on the breakout of the bull market, taking out leveraged loans on BlockFi and buying Bitcoin with it. And a lot of people were really not happy with it at the time. And I did it again at $20,000, right? And so on and so forth. And I did it again today. And at the top, I am leaning now towards if I wanted to exit any Bitcoin, and I don't think this is for the average person, is perhaps where it's the most dangerous, taking out a Bitcoin loan, having some access to liquidity, and not selling my Bitcoin, because I am leaning intuitively towards towards the bear market being much different. I don't want to say anything without it being presented correctly that might like throw anyone off, right? But I am leaning towards the nature changing, right? And I have no idea what it's going to look like. Like, I'm not trying to say we're going to enter in that random walk or not, but would it be possible that we, put in a near-term top? We talked about all the different possibilities. It's not right now. But what I am saying is that I am considering on spot Bitcoin just simply accessing some liquidity. And then if I'm doing that, that means at the same time, because I do believe we could see like a sharp move down, and 50% moves come quickly. And a lot of other people, you might be getting liquidated at 50%. So what that means is that one of two things: you better have either additional collateral that you could post to protect yourself, and or are you taking some type of short position against altcoins at this particular point in order to go ahead, as price comes off, could you take profits and add that to the collateral? Again, these are very advanced things, but if you want to talk about them and want to know where I'm leaning and what I'm doing, I want to tell you about that and explain it so that it can help everyone else form their own ideas and opinions. The best way, again, going back to the beginning of the bull market, many people didn't believe me when I said it. Strategy number one, holding Bitcoin and selling at the cycle peak, and again, that just brings it back. Like, the simpler is usually going to be the best for most. Now, most here for sure and with certainty. Strategy number two, why we're not neutral, because you remember that, like, from the breakout of the bull market up until over here, we were trading the pullback. Strategy number two, leaning into them, right? Now, some people, they're not able to adapt when we are like, it's time to get neutral. They're like, well, I'm over leveraged and I'm going to stick into a position, right? That's on you. Sorry, I can't do anything about that. Like, that's on you. And then out of the low over here, again, it was leveraged positions up until when? $53,000. And then it was take profits, right? And that's how we did it. So, Jordan, how do you see this Bitcoin fractal going forward? Similar to Amazon, better to trade off of it? I don't think that. I think, Fabio, the point of presenting the fractal right now is to point out, and just to get people to think outside the box, is that, well, this to me is undeniable, right? Lining up these two fractals of Amazon and Bitcoin, both at a similar stage in their adoption. It wasn't at the very beginning, right, where Bitcoin went nuts. This is Amazon going nuts on a log scale. That's not even on a linear scale, right? This is like at the launch, Amazon also going nuts, right? And then, but it's taking that fractal after the first halving for Bitcoin, for Amazon. It's after the dot-com bust, right? Imagine so many similarities. And is what we're seeing actually is this is how exponential growth in tech looks like. Maybe, I don't know, but I want to be able to pivot from what has been happening into the past to will happen in the future as quick as I can. And we've always said, like, when the model's proven wrong, then there's no more model. Like, what do you think? Do you think going forward, we're looking at lengthening cycles and diminishing returns? That doesn't add up for myself. I don't think so. And again, I mean, is that the way I should be viewing Amazon? Should I pull up a log regression channel instead? But Amazon's not experiencing diminishing returns. It's tech that's experiencing exponential growth, much the same way I expect Bitcoin with. Now, do you think it's a good idea? Because this fractal is very loose. There are many similarities and there are many differences, right? And I don't think that just going off the Amazon fractal is a good idea to try to like predict what happens next on Bitcoin. But I do think, and again, the guy's a genius if he got this. Willy Woo talking about, maybe we're looking at that, that random, if this is what he means by random walk towards $1 million, and I think it is. Look, to not paying attention at this particular point, I think you're doing yourself, we would be doing ourselves a disservice. And I just want to get it right in real time. There's nothing easy about it. So how would you factor the halving into the Amazon chart? You can't factor the halving into the Amazon chart, right? At all. There's, there's no way you could, thank you, Dave. You can't factor the halving into the Amazon chart. Now, you could break Amazon up into 4-year intervals, right? And if someone were watching Amazon as you're watching Bitcoin, like would they be like diminishing returns? Because this return was greater over here than this one, right? And then the next one, are they like, I want to go 4 years later, right? So this is 4 years exactly. And then you go to 2007 when we have the next crisis. So is someone saying to you, diminishing returns, right? And at the time, if they did that in real time, you would have to be like, oh yeah, this is Amazon's experiencing diminishing returns. Look, every 4 years there's been a wave and the wave is getting less and less. Diminishing returns. But, that's not what happened going forward. So I'm just saying, I'm not trying to say this is what's going to happen with Bitcoin. I am just saying, hey, let's pay attention. Let's be flexible. Let's make sure, as always, we consult multiple vantage points, and we implement that skill of thinking critically, thinking for ourselves. That's why we're always pushing on and testing on not only our own current assessment, but everyone else's. Look how hard I pushed on Willy Woo's last cycle. You all know how literally hard I pushed on it. Why? I said from the beginning, because look, I don't understand it. So I want to understand it. Like, I value Willy's input, and for a long time, I pushed and I pushed and I pushed, and then I'll be the first, if he's right, to be like, man, the guy was so early and a genius. At the same time, if we do see something like lengthening cycles and diminishing returns, Benjamin gets all the credit in the world. And there's everything right with that, nothing wrong with that. So there's a lot of stuff I missed over here. Tech and Bitcoin explosive returns can't that diminish simply based on future demand due to monetary policy, and as well as what we are looking at just with the dollar at its current trajectory. It's unsustainable. What's going to happen? Where are those flows coming from? People, I think it's very difficult for all of us to understand, especially and including myself, exponential growth. There's a massive amount of money out there. It doesn't take much money to move Bitcoin at all. And there are a lot of people out there who are holding strong. There's no question, if you saw on Bitcoin some sharp move up, because here's where we are today. And if we saw a sharp move up, we're over here. Let me zoom in a little bit. We're like into that pullback right over here. And if we shot up, a lot of people are going to sell. A lot of people will be taking profits. A lot of people will deem Bitcoin overvalued and there's no question about that. And yes, it won't be straight up correction, right? But will this correction, be something if Bitcoin shoots up from $160,000 and then like comes off 50%, trading at $70,000, are you going to see a lot of people stepping in, including a lot of people with big money? Maybe. Let's be flexible. I don't have a crystal ball, but I want to get it right in real time. Up, towards $1 million. But he meant that like mini bulls and mini bears are occurring at the whole time. I think that's what he means by random walk, is mini bulls, mini bears lasting months on time. And if you look at Amazon occurring that during that time, that's exactly what's happening, right? You have multiple or many 30% drawdowns that occur on Amazon regularly. And, if you would have had just leaned in, look here in 2019, 2020, like every investor out there was like, if over the last 10 years, I just leaned in to every 30% drawdown on Amazon. Is that going to be much different? That's only a 13% one. Is that much different for what's going to take place for Bitcoin over the next 10 years? Maybe. And does that mean that Bitcoin can't have a 50% drawdown? Not at all. No one here at any point in time is trying to say that that you are looking as this is a model, and that when Amazon makes a move down around that same time, Bitcoin should, or anything like that, or that like the volatility should resemble itself, because it didn't over here at all. It's very off at a lot of times, right? But stepping back and looking at this 4-year period, wow, that's undeniable for me at least. But that's what I'm here to do. What I'm looking at is I think that we are over here right now, somewhere around Amazon 2019, if indeed we are seeing anything similar to this fractal playing out. What this fractal has to do with the adoption of an asset, a tech asset, I'm not exactly sure. Investor behavior certainly be played in there. But take this off log for a minute as we enter that exponential growth phase, right? As we reach break the chasm of early adoption. When did you start using Amazon regularly? When did you yourself start using Amazon regularly? For me, it was sometime around 2007 that I began using Amazon, and it wasn't regularly, right? But that's when I began really using Amazon. And, was it the chasm? We talked about just earlier today, this over here, and Bitcoin is right over here, right? So if we are indeed entering a new phase that comes next, then we're looking at, the exponential growth phase. Let's say, take that off log for 1 second. I just want you to see what that looks like on linear. I think that's really important, and, again, so are we looking for perhaps even seeing something like the blow off top occur, whether it's into January, February, March, something like the blow off top? And then is this where a lot of people are going to get caught off guard? This is what I was talking about this morning to DeckDev. I think the greatest risk is becoming whenever we get that top, when those indicators are signal very overbought levels, overvalued levels on Bitcoin, a lot of people exiting. Is that the end? That's what I think is the biggest risk at this particular point, and it's what we need to be mentally prepared for. So if it is, it isn't, we're able in real time to weigh and assess all risks and trade accordingly. So isn't it neat though, seeing it on the linear scale, that enormous move up? Are we looking at right now the early part of Bitcoin as we look at the first cycle, the second cycle, this current cycle? Are we going to be looking back 10 years from now, 5 years from now, and is the chart going to more resemble this? What else? A couple other things. Do you see gold, Bitcoin, or SILJ, which I don't know, Bitcoin as gray trades at some point, March to July, gold and silver actually being, I personally think like this. If at any point, just as I said, if I deem Bitcoin to be overvalued, right? Overvalued is this area for me on this log chart. If we see Bitcoin in between the white and the orange, which I really don't think that Bitcoin is overvalued, at that point, if people were looking to take profits. One strategy for myself might be accessing liquidity through a loan, right? Making sure that's hedged on the other side, but also a good play at this point, and one that I also plan on, I don't know that I will, but plan on executing, would be buying more physical gold, having it held in a vault in Singapore, and as simple a hedge as a diversification, right? And that's not like that, and that's simply nothing more than that, right? Just simply as a diversification. I don't think that in the long run, outside of gold being, and you are seeing lots of countries and central banks picking up gold, that outside of like a massive revaluation of gold, that you're looking at gold outperforming Bitcoin. The whole gold to Bitcoin play is if Bitcoin goes into its bear market with its normal structure, 85% drawdown, then like gold, that cross, there's no question gold does much better on it. Now, you have to be looking at what happens over here, and are we looking at a blow off top that could send Bitcoin into its normal bear market? And I don't think at this point a blow off top, even if we see it into beginning of January, February, towards $160,000, is that. A lot of people at that point will say diminishing returns, right? They're not wrong at that moment. I just don't think that's enough then to take us back down into the, we'll see what happens. Yeah, we'll do it again tomorrow. What else could I say? That's what we do over here, And I'm enjoying each and every session so much with y'all. I know that it's always like for all of us, just like hats on. It's time to learn, classes in session. And that's what we're doing. We're students of the market. And I think that the lessons that have been displayed and learned here just over the last 5 days alone are making everyone better investors, better traders going forward. That's what's important, right? We're gonna keep doing it together. Iron sharpens iron, and we're gonna get stronger and stronger. Thank you all for the love and the support. Just thank you all for the love and the support. And you have no idea. You have an idea. I guess I shouldn't say I don't know. I'm really, really grateful for it, for you. So I'm really, really glad to be here with y'all. And yeah, I don't want to like, could I see this happening? Yeah, I kind of see it happening. I'm not going to tie myself to it or anything like that. And we'll keep working hard. How about that? We'll just keep at it. All right, everyone. Have a beautiful day, and I'll see you all tomorrow. May God bless you. Is lengthening cycles in play? What would it look like? If lengthening cycles are in play, in my opinion, we are looking at increasing returns. K2, I do not have a model if the current model breaks. And I also think that there's a strong possibility if lengthening cycles are in play, it's going to get hard. It gets hard, whereas if we take out the all-time high, when we take out the all-time high, there's probably a strong move, probably a small pullback, and then like a bigger move up. Into that bigger move up, at this potential time, the 4-year cycle seasonality is kind of still in play, and it could also kind of be in play for roots lengthening block cycles. All right. So if price starts coming off at that point, us and a lot of other people might think that that is the top, and rightfully so. It's going to get hard. So we've all looked at the scenarios that what happens after, and this is when we're going to have to be our sharpest. Again, if that's happening up here, then I think that's the top, or a bigger term top, a longer term top. If this is happening, showing like diminishing returns area, I do not think it's going to be the top. I think that we're going to be looking at lengthening cycles. I think that when it tops, I have zero idea. And from there, a lot of people are going to be thinking like things like, the models that have lengthening cycles, bull market peaking out at some point into, let's call it late March, April, or May. Are they going to be? I don't think that, though. I don't know. That's as far as I'll go, because I really don't know. I think that I need to focus most on the near term, and that's this right here, right now. And we just got to make sure that we get past this. But to try to say what I think is going to be happening beyond that, that's too far. Let's just stay focused where we are. All right, I can't do that. I don't know, but my instinct is there. It is. Right? Be the teapot. Thank you everyone for this time today. Great session once again. We came, we saw, we conquered, and we did it together. All right. So have a beautiful day, everyone. And I will be seeing you all again tomorrow.